Happy Friday. I hope everybody's having a great finish to their week. I know that I personally have had a wonderful week out here in the Midwest with amazing referral partners. So, for those of you who I met with this week, thank you so much for your hospitality. I've absolutely enjoyed my time out here, and I'm excited to get home so I can watch some Utes football and enjoy my weekend. But I wanted to deliver the credit update this week and talk about a couple different things that we're starting to see in the market when it comes to credit. The first thing that we're starting to see is an increase in debt for consumers, an increase in consumers missing payments and going delinquent. And we're starting to see a slowdown or a stall with credit score development and growth nationally. Now, what does this mean? Obviously, it means that people are falling behind due to inflation or job loss. Life events are getting in the way of people being able to maintain healthy credit. And this could potentially have implications down the road for consumers being able to afford to buy a home. And so, one of the things that we always want to promote as a company is learning how to use credit in a healthy manner and learning how to recover from it if you run into a life situation, because it's inevitable for just about all of us that something might happen that could potentially negatively impact our credit score. And so, for any of your clients who fall into this category where they had a life event negatively impact their credit, they're adding more debt, or they're running into a situation where they're falling behind on their bills, we have a ton of free resources on our website where they can go and learn about how to use credit wisely. They can learn how to hedge against some of the situations that have come up in their lives. And if they need to, they can learn how to rebuild after a life event so that credit isn't going to continue to hold them down and potentially hold them out of the home buying market for longer than it needs to. So definitely the industry is shifting a little bit. Consumer habits are shifting. We're starting to see overall debt loads increase. And this is going to be something that will impact consumers for a long time. However, there are a lot of free resources out there, including our website, available to help consumers navigate these situations, because if they can learn how to navigate it now and not be reactive a couple years from now, it could seriously save their credit health and their purchasing power for decades to come. Now, the second thing that I wanted to focus on here today was some changes that are coming up to the buy now, pay later type loans. There's a lot of news about these types of loans. Unfortunately, a lot of people are getting trapped into these types of loans. There's high delinquency rates associated with them, and the CFPB is targeting these to try to put consumer friendly policies in place to keep people from getting in trouble with these buy now, pay later loans. Now, for a lot of you in the mortgage industry, you see these loans show up on a credit report, and they can be kind of a headache, especially when people start to fall delinquent on them. And so, advising your clients to not pay the $3 a month for a $15 purchase may be beneficial, especially if they're in the home buying process. So, if you have clients who are hoping to be home buyers in the future, those buy now, pay later type loans really don't do anything to help their credit and could have a serious negative side effect if they were to fall behind on those payments. So that's going to be something that we'll keep a close eye on to see what happens with the CFPB and what direction they take with those types of loans, and ultimately what impact that will have for the consumer. Now, always on these videos, I want to talk about success stories, because we have a lot of clients who are working really hard to reach their goal of credit qualifying, potentially buying a home. And just recently, this week, I had the opportunity to review a file with my team where we were able to successfully remove over 50 medical collections from the credit report and one charge off that was reporting outside of the statute of limitations. Now, this is a huge success because the credit bureaus changed their policy on how medical collections can report to credit. However, in this current credit system, all consumers are guilty until proven innocent. They're not innocent until proven guilty. And so consumers have to take action to remove these things and uphold their rights and ensure that the policies of the credit bureaus are being upheld as well. And that's exactly what we were able to do for them, removing over 50 derogatory accounts from their credit report that were medical related, and also resolving a statute of limitations violation on a charge off, completely changing this person's credit profile and opening up the pathway for them to reach their credit goals in the future. So exciting stories there. But overall, if you have questions that you'd like us to answer on these videos, or if you have questions about credit repair or responsible credit repair or helping your clients get into a position of credit qualify in the future, feel free to reach out to us directly. We'd love to answer those questions for you. And for all of our amazing referral partners out there, thank you so much for your trust in our services. We work for you. We're here to help you get more families ready to credit qualify and ultimately help you grow your business. And we appreciate the trust that you put in our services.